Hey everybody, today is Wednesday, the 3rd of July, and the S&P is at a new all-time closing high. As I've mentioned, this past week and a half, we were cautious as it has been basically in a sideways range, but not bearish because the primary trend is higher. Never get bearish while the longer term trend is higher. We move to a position of caution and safety and then look to each stock to prove itself on its own merits. But as far as the overall market goes, we're now back to new all-time highs, confirming the strength that we're seeing in so many individual names. The NASDAQ also broke out of this recent range here that had it constrained, and now what we'll be looking for is the top end of these ranges. Now that we've broken that this prior resistance is likely to become support on pullbacks. It might dip slightly below these levels, but those general areas in here are expected now to flip to support now that they've been tested and broken as far as resistance was. Russell 2000, I'm going to say it again, it remains a waste of time. I don't want to talk about it. Semiconductors are continuing to move higher here. And I want to point out something that I shared on Twitter that's pretty interesting. And that is this tweet, what I put on last night, Tuesday night, that is. What I was showing was this is the SMH, the Semiconductor Index, from January of this year through yesterday's close. And what I had done is taken this rally right here from April and cut that out and then overlaid it right here to show the similarities. Now, I don't look at these as a blueprint, meaning that just because we rallied up like this, went sideways, and then had a flush, that we're going to do that again. But it's pretty uncanny to look at how this rally here of the last 3 months has mimicked the prior rally, how we peaked with an outside reversal bar down. And then today we gapped up and finished a little bit higher here as well. So let's take a look at that. So, if we're going to see something similar to this, well, maybe we're going to start to turn sideways, drift lower, shake out, and go. I don't look at it as a blueprint. To me, these are just interesting curiosities. What we want to do is continue to look at the market as objectively as possible. And when we look at this market objectively, we see that we remain above a rising 20-day moving average, which is above a rising 50-day moving average, which is in turn above a rising 200-day moving average. That all means bullish. We held above this little band of support this week and broke from this little range. So now we'll look to see if this holds as support. Then we'll expect to see continued move higher. If instead it starts to follow this pattern, well, then we will adjust our time frames and our positions accordingly. But for now, it's innocent till proven guilty. It's a little bit stretched in the near term, but it is above a rising 5-day moving average, which tells me that the near-term trend on this 30-minute time frame on the right is now in alignment with what we see on the daily time frame. It's possible we could see something like this, but that's not my trading plan. That's just an interesting curiosity, as I pointed out. Biotechs continue to be disappointing. They're back down towards the low end of their recent range in here and below the year-to-date anchor, holding that rising 50-day moving average. That'll be key next week. I'm not going to be a dip buyer. I refuse to buy when the market is making lower highs and lower lows below a declining 5-day moving average. So I'll be looking for this to, on Friday and into next week, starting to maybe flatten out a little bit, maybe undercut that 50-day moving average, start to do a little bit of this. The prize that we want to keep our eyes on is based on the weekly time frame, but there's no reason to be involved yet until the shorter term time frames confirm that we are in fact breaking higher. You don't have to buy at $90. In fact, it's probably better to buy at 95.5 or 96 as it starts to maybe do something like this. We want to wait for price confirmation to confirm what we believe could be an emerging uptrend on the weekly time frame. But right now, with it still stuck in this choppy range and below a declining 5-day moving average, it's just something to keep an eye on and say, hey, maybe that gets going. But right now, it's not going. Tesla had a huge move this week. It broke, free from where it was supposed to at that resistance with the year-to-date anchor. Last couple of weeks, I've been talking about how in here I wanted to see a shakeout. We got that shakeout. We tested the year-to-date anchor, built some energy, and then got going from there. And it's just been up, and away from that point, cutting through every level of potential supply. We saw the 200-day moving average did not act as resistance right in here, so let's just isolate that. I was looking for a move to here first, then maybe to the 200-day moving average, and then the anchor from this peak. We went through all of those prices, so it doesn't mean sell at those levels. And yesterday when I tweeted about, hey, be cautious here. We've hit the measured move of objective. We're at the anchor from the all-time high. Good time to tighten your stops. Tighten your stops does not mean bearish. It means still bullish. It's basically the equivalent of saying it's a hold if you own it, but raise your stops underneath the successive higher lows that make the most sense to you. Eventually, this stock will pull back and give another opportunity, but buying it up here, unless you're very short-term oriented, doesn't seem to make sense to me. But it's your money. Do with it what you think is the appropriate thing to do. TGTX is starting to get moving a little bit in here again. We've got that 5-day moving average rising again. If you've been listening to me, you know I'm bullish this stock. I've been trading it aggressively. It has a 23% short position with a bullish weekly chart, and it's got a profitable drug. Their first quarter of profits was last quarter. So this one I think that is going to continue to be a good trader. I put CCL on the radar. I'm not in it yet, but CCL has been really a stock I haven't traded at all. Since COVID, when we saw, this big decline in here, and, we're only a couple points off of the lows from COVID here. Well, I guess we're about a double, so that's significant, but it hasn't been a smooth ride. And here on this weekly time frame, you can see that, it broke back down with this pattern of lower highs and lower lows over here. And now we've got a pattern of higher lows and lower highs, but the energy is constricting in here and maybe getting ready to go. The stock broke higher on this day right here. That was an earnings report. It broke higher on a nice increase in volume. Subsequently, we're seeing the volume diminish as it retraces in here. As I said, I'm not long this stock yet. It's below a declining 5-day moving average. I'm not looking to buy this thing while it's below it, but it's on my radar for probably sometime next week. Let's say it does something like this on Friday, and then maybe on Monday it does this, comes up to the declining 5-day moving average, then sells off, makes a lower high, then a higher low, and then as that 5-day moving average flattens out, then I would want to be a buyer over here with a tight stop at this point or a worst case stop under here. That's the way I look at stocks, is not where they are right now, but where they could go and what the route they would take to get there. So I don't want to be a buyer of a stock like this right now, but I do want to, of course, keep a close eye on it. Let's talk about energy names. They are getting supply right where they're supposed to with the declining 50-day moving average. And the action on the 30-minute time frame has been quite choppy in here. Well, oil is starting to perform better. And when we look at oil, let's just take a look at that. We'll look at the cryptos here in a moment. Here's oil. That's behaving well. So that could provide the reason for energy names to start going here in the next week or so. I'd keep an eye on MRO. That one has a nice tight consolidation in here. EGY has a nice tight consolidation in here. If you look at the weekly time frame on that one, it looks like it's ready to do something. But let's go back and talk about crypto for a moment, because I've been cautious on this, saying that I got out of it and I'm still out of it. We're right back down once again to the year-to-date anchored VWAP. And I will point out that the more times any level of support is tested, the more likely it is to fail. It doesn't mean it's going to right here. I don't have a position in it. I don't care if it breaks down. I would, I guess, prefer for it to break down. But this week we saw a little bit of a rally right to the declining 20-day moving average, which is below the declining 50-day moving average, below the anchored volume weighted average price from this low, from this high, and this high. So the sellers, it's still undergoing profit taking. That's the way you have to look at it. There's no hurry to get involved in Bitcoin. Maybe it finds buyers in here and bounces. Like I said, I would prefer a nice shakeout, maybe down to its 55, come back into the range, and that which doesn't kill it makes it stronger. That's not a prediction, just a potential scenario. Ethereum also found supply right at its declining 20-day moving average, and it still seems likely it's going to come down to this 3,200 level where we see the year-to-date anchored VWAP. And Solana, which had been the better of them, it did kind of make that higher low in here and continue up, but right to where it was supposed to, right to this 50-day moving average and the anchor off of the high. So I don't think it makes sense to own any of these right now, not from a near-term perspective. That's the way I look at these things. And enjoy your day off for the 4th of July.